Hey folks, Dan Frio here with your market update for November 13th, 2024. As we said yesterday, when the market closed, rates went up. It's a new day today. So let's see what's happening in the markets today. Basically, the biggest number come out today is CPI, consumer inflation. It actually met expectations. So the markets are stabilizing off of this. But some good news behind the equation is right through here. If you strip out, right down here at the bottom, without the shelter component, CPI would be at the Fed's target or close enough at 2.1 year over year at the core level and well below the target for all items less shelter at 1.3 year over year. So that's what the markets are applauding right now. So that's what we're seeing right through here. So we've got core CPI came in, CPI month over month, and CPI year over year. Let me explain what these are. So next time you see them, with core CPI and anything you see core in front of, mainly they strip out some components. In this case, they strip out food and energy because of the volatility that it has. So right here, we saw the previous reading was 0.3, expected to come in at 0.3, came in at 0.3. Hold on a second. Let me just do this again. Previous on the CPI month over month, that's what the MOM means. Previous reading was 0.2, expected 0.2, came in at 0.2. And then CPI YOY means year over year. Last reading was 2.4. They expected it at 2.6. It came in at 2.6. You might say, well, this is higher than expected. When you start pulling out the components, especially like we said right down through here, if you take out shelter, it's a very good number. Here's the problem that we have right now. There's too much debt out there. So why does this play a role? We're going to hit $36 trillion here soon. This plays a huge role because of this. Mortgage rates are tied to a mortgage bond, okay? Well, all this money right through here, this was actually funded with a mortgage bond, or not a mortgage bond, a Treasury bond. Okay, so that's what happens. The government, when they don't have enough money, they issue Treasury bonds. Corporations, when they need money, they issue corporate bonds. When the mortgage industry needs money or they do loans, they do mortgage bonds. So all these bonds are hitting the market, and there's too many of them. That's the cause of rates being higher for longer because the Federal Reserve is cutting rates. So think of it. Federal Reserve cut rates, but mortgage rates went up. Why? Well, because they're tied to a bond that has all this mess in it. So let's get over to it. Right through here, here's what we're seeing so far today in the bond market. It's up 44 ticks. That's great news. I'll explain this to you for the newbies. We follow this right here. It's an MBS. It's a mortgage bond. Okay, and this tells us what the price is doing right now. So right now, we open the markets right through here. The market opened, and then woof, it shot all the way up to here. So it's up 44 ticks right now. That means mortgage rates are going to drop probably close to about 1/8%. So if we go over here, we're going to be back in the maybe 6.9 range. Maybe we'll hit 6.9 right on the button. But that's the expectations right now. See if this rally continues through the day. And I'll be back later today to tell you guys how the market's closed. Right through here, we're looking at equities. We have the Dow Jones up 11. We have the S&P unchanged. NASDAQ down 20. Basically, it's oil down, which is fantastic. And we have the 10-year Treasury. It is also down. So this is good news. That's good news. Let's get over to cryptocurrencies. Whoa, Bitcoin is just shy of $90,000, and we had oil on the last screen, but oil prices hold at a 2-week low. That's helping the inflation numbers. Trust me, it's going to help in the long run. So now here's what we're contending with. This is kind of the economy in a snapshot. What we're trying to figure out is what is the neutral rate for the Fed. Okay, so we're trying to figure out that is because the federal funds rate, that's what they're going to cut it to. What normally happens is this. They'll try to peg the federal funds rate to the inflation rate, okay? But we don't know. We don't know if inflation's going to raise its ugly head again or what's what. So let's just assume for these purposes, the neutral rate is 3%. Okay, just for simplistic reasons. I think they're going to be, 2.5% to 3%. But right through here, here's where the federal funds rate is. So that means we're way over on this rate. So the Federal Reserve, they're going to continue to lower this till it hits that net neutral rate, whatever that is. I'm still saying, let's say, for example, even if it's 3.5, they can cut still 100 basis points or 1 full percent off the federal funds rate. So let's get over to here, the CME FedWatch tool. This is telling us what the Fed's proposal to do at the next meetings all the way through next year. So here's the dates of the meetings that you're seeing right through here. And here's where the federal funds rate potentially will be. So let's get over to here. The federal funds rate right now is 4.5 to 4.75. We go over to here, 4.5 to 4.75. So is it going to stay there? Well, there's a 21% chance that it might stay right there, but there is an 80% chance it's going to be cut by 25 basis points either in December or in January. So it's coming, but I hope you guys learned your lesson. When the Federal Reserve cuts rates, that doesn't mean mortgage rates are going to go up. And again, the culprit there is right there, plus corporate bonds, plus everything else. So unless the country gets basically our debt under control, you're going to see rates higher for longer. So let's get over to here. We do have a special guest to us, Jaspreet. He's a friend of the show. He comes back about every year about this time. We quiz him up and down on his projections or forecasts for 2025, and that's what we're going to do today on our live event at 2:30 Central Time. So join us then. Love to see you there. But who am I? What do I do? Well, my name is Dan Frio. I'm actually your national mortgage guy. If you're out there anywhere in the country and you need help with a mortgage, I don't care if you're looking to buy that first house, refinance, even buy an investment property, I'd love to help you. Are you looking to consolidate some debt? Are you looking for maybe a reverse mortgage? Please check us out. We'd love to help. So go to therateupdate.com. If you're trying to buy that first house, what I'd suggest you do is hit this button right through here. It's our grant finder. It's going to give you national grants as well as grants in the Chicagoland area. But if you're ready to get the ball rolling or you want to talk to somebody, hit the apply now button. You're going to be able to put in your application or schedule an appointment so we can answer all those questions. Or if you want, you can just call. And we're in the process of changing our phone systems over right now. So if you call and you have to leave a message, I apologize, but we get right back to you, I promise. But if you give us a call at 844-775-5626, or you can email me directly, and yes, it's me, at dan@therateupdate.com. So thanks so much for watching, guys. Please join us today at 2:30 Central. We have Jaspreet as our special guest, and then I'll be back at the closing bell to let you guys know how all this mess ended for the day. Thanks for watching.